And now I'm incredibly pleased to introduce our next practitioner panel, which will be chaired and led by Maria Gotsch. It's called Enterprise Innovation from the Inside Out. And I just want to let you know that Maria is the perfect person to lead this panel. She's the president and CEO of the Partnership Fund for New York. And the Partnership Fund for New York links our local financial institutions with startups to drive innovation and to ensure our city's place in the future of financial services. So Maria, please introduce your panelists, and just a note that this panel does not have a Q&A. Take it away, Maria.
Great, thank you so much. Really great to be with you all today, and thank you for tuning in on a Friday. As I was introduced, I'm Maria Gotsch, and I run also relevant to this topic an accelerator program called the FinTech Innovation Lab, which connects emerging technology companies to large financial institutions. And so the title of our panel is Global FinTech 2021, No Borders, No Barriers. And while no borders, no barriers are how big tech companies think, the banks would love to think that way. But actually in financial services, there are barriers and there are borders. And Andrew, our panelist from JP Morgan, is smiling, because so hopefully we will get into that balance that you really have to strike in financial services between wanting to have no barriers, no borders, serving your customers, and having to deal with regulators and data issues. So with no further ado, let me introduce the panelists. And I'm actually going to let each of them give a 30-second introduction, and we will go in order on the screen. So we're going to start with Elaine, and then we'll do Andrew, Sanjiv, and then Sanjay. So Elaine, over to you first.
Sure. Hi, everyone. My name is Elaine Duff. I'm a senior vice president at FIS. FIS is Fidelity National Information Services. We are an American Fortune 500 company, and our slogan is that we advance the way the world pays, invests, and banks. We're also known as the largest processing and payment company in the world. Today, I'm responsible for strategic initiatives and business operations for our global banking and digital channels division. I also had some experience at JP Morgan for the previous 15 years, working in product management roles in either derivatives and collateral management. Looking forward to being here today, Maria, and talking through some of the topics on hand.
Great, thank you. Andrew.
Hello. So thank you, Kathleen and Maria, for organizing today. My name is Sanjiv Boyajian, and I'm an executive director at JP Morgan. I'm relatively new to the bank, a little bit less than a year, but I've spent then 10 years at fintechs ranging from Google to Kickstarter to TransferWise, really focusing on payments and how to bring value-added services then to their end customers through payment channels. At JPM, I'm responsible for both emerging payments as well as how the bank looks at fintechs. And that could range from how do we think about fintechs in terms of potential partnerships to how do we better serve fintech clients as they continue to expand in the North American market. Very much looking forward to today's conversation.
Great. And Sanjiv?
Yeah, good morning, everybody. I'm in a way different time zone. I'm in India right now, and it's 11:30 at night, but I'd rather be here at night than in the cold in New York, but good to see all of you. I'm also happy to be, I think, the only NYU Stern alumni on this panel, so that I'm at least there with the Stern flag, if nothing else. I'm a management consultant for the last 35 years. I did a buyout of a consulting firm. It's now called Cedar, and we are basically a strategy consulting firm and a technology consulting firm to banks. I also did a buyout of a fintech research company in the UK in 2015, which is a 30-year-old firm. It's called IBS Intelligence. And we basically do research reports on all banking technology, covering about 400 suppliers. And we do some consulting work for suppliers, maybe not FIS, but companies like Temenos and Finastra and so on and so forth. And we're basically, in the fintech, and shall I say, bank tech ecosystem that we're going to talk about today. Yeah. There's a bit of a distinction I'm going to draw as we go forward. Yeah. But looking forward.
Great.
Yeah.
And Sanjay.
Hi, everyone. Sanjay Mathew. I'm a senior director within Oracle. For those of you who know Oracle, we're a 40-year-old enterprise technology company, more known for, I would say, a lot of databases and technology, but one of the things that Oracle has is a full service set of solutions for banking and financial services. So I look at the strategy for Oracle in terms of bringing these solutions into financial services. So we cover 6 solutions from front office to core banking to payments, compliance, HR, financial management, fraud. So anything that you want to run a front to back retail bank or corporate bank, we support that. Now, it's a very large set of solutions. We service top 100 global clients from pure technology to, like I said, core banking. My role in strategy, one of the areas that relevant to the topic here is I also had the FinTech ecosystem, which is how do we take fintechs in the market, how do we integrate them into Oracle, how do we basically innovate with them, take them into clients like JP, Citi, Bank of America, and extend our products as well, right? So we don't build everything. I know there are some questions there, but that's been how do we create a rich ecosystem and co-innovate with all the innovation that's coming in the market. I've been with Oracle for 20 years, so all in driving innovation and strategy consulting into financial services. So glad to be here.
Great. So the mission of the FinTech Lab is to help make New York City a center for financial services and FinTech by doing and really providing access and insights on what are the large financial institutions doing for the enterprise companies. And so I think those are my 2 objectives for this panel. Just thinking about who the audience is to help them get insights into what are the large players. And we've got some of the premier ones on the panel. What are you all thinking about from a perspective of innovation, FinTech, and then also the extent to which it makes sense to partner with you all? What are some sort of good ways to do that? How to get access to you? How should they position themselves? So with that framing, let me go to my first set of questions, which is, let's start with what's going on at each of your institutions, specifically around FinTech. So if you think about for this year, for 2021, if you could sit down and sit in the middle of one of your strategy meetings without obviously revealing anything confidential, what were the top 2 or 3 things that are going on from a strategic perspective at your organizations? And Andrew, I'm going to start with you on this question.
Of course. So I think, it's no secret that JPM has been really thinking about digitalization and how to proceed in that regard. So you look at some of the services under sort of the new Onyx branding that have existed, whether that be Link or whether that be JPM Coin. And it's really trying to understand how is it that we can take payments and push them even further along the digitalization evolution and away from some of the maybe more legacy payment types, be that cash or be that check. So, first and foremost on my mind is specifically that is how do we actually push not only product development, but as well as consumer behavior away from those legacy payment channels and into a more digital channel.
Okay. And let me go to Sanjay next. So what's, in terms of specifically FinTech, I think for this question, what are the top priorities at Oracle?
Yeah. So from an Oracle overall perspective, I mean, we look at, what the industry is going after. And then, of course, how does it map to what capabilities that we bring and how do we drive value into our clients, right? That's the overarching set of parameters that we operate in. So with that, I would say, post-COVID or, in this COVID era, digitization is top of mind. So everything around digital banking, solutions in the front office, customer engagement. And then I would sort of lead into this in the COVID era with respect to getting solutions faster. Time to market is so important. We don't build everything. So the idea of basically partnering with the ecosystem, with open banking, API banking, extending the products, whether it's connecting our solutions to the bank directly or to a FinTech, that's top of mind. The second big theme is around in the era, right now it's all digital, right? Typically we would be in a panel in New York City. I remember meeting Kathleen last year talking about, in-person event, but this is all going to be digital. So how do you understand what the customer behavior is? Who is this customer? how do you monetize that data, right? So it's about data and personalization. So there's a big theme about, how do I take data, internal data, external data, provide the right service at the right time. So highly hyper-personalized, right? So AI and analytics, that's a big theme, especially Oracle being a big data company. It's about taking that data and then elevating it to the next level. And the third big theme in terms of our customers is about reducing costs and increasing agility. So you got to do more with less. I mean, we're sort of in a very constrained environment. Interest rates were very low, NIM was low, but now of course there's something totally opposite that's happening in the market. But with that, it's about modernization of the core banking, modernization of your technology legacy stacks, which are on mainframe, modernizing finance and risk and regulatory disclosure. So how do I reduce all that? So what we say is basically, how do I reduce the run the bank cost so that I can basically drive more into change the bank, right? So this has been a theme always, basically, how do I basically drive all the operate costs and then drive it into the innovation bucket? And you can do that by getting rid of old legacy technology with hundreds of people trying to maintain doing repetitive work and driving that into modern stacks, SaaS-based solutions, so the banks can actually innovate, right? So those are the three areas. I mean, we drive it across those 6 domains that I talked about: front office, financial reporting, risk compliance, HR management, technology modernization, and then core banking, retail, and core. So we've got a huge plethora of solutions that we can mix and match and innovate. And then the last piece to it is like, if we didn't have solutions, it's with that FinTech initiative that I run, we can add more into it and drive highly personalized solutions. So that's our focus here.
Great. Elaine, so if I'm sitting in your conference room, what am I hearing?
Yeah, sure. So it's probably a mix of what you've heard, but I'll touch upon a few points. So certainly think that kind of a holistic integrated experience is paramount to what our clients are looking for. And a couple kind of product specific areas, a couple things that we're doing is one, we're developing a fully modern banking platform. So multi-tenant, cloud enabled, basically enabling our large financial institutions to have a lift and shift solution to help banks transform to a fully modernized ecosystem, or use it as a fast enabler for a new strategy, such as a digital offering. That's been an investment we've had for a few years and continues on, and seeing a lot of traction in the market of someone really looking for a holistic change. We're doing a similar thing on the payment side, referred to as Payments One, and this is providing a single platform to have end-to-end debit card management solution. So think through loyalty, real-time fraud protection, card production, and network services, and making sure that we've got a one-stop shop for our clients. So those, I'll call them kind of big bets, large investments, are really trying to transform that industry and think through sort of 4th generation technology. I think also just holistically, as we think through kind of the COVID area, one of the things that's paramount is we all need to kind of improve our resiliency coming off the wake of a global pandemic. So we're certainly spending time looking at firm-wide initiatives on bringing automation and enable technologies across divisions in a cohesive way. One, this will help us reduce costs and help us translate those costs to our clients in a more challenged economic environment, and two, ensure we have that resiliency that I mentioned about, ensuring that we've got, automated processes versus people that we depend upon, especially as we've got the change that have come through. The last thing I would mention is FIS is a newly broader company with our acquisition of WorldPay in 2019. So a big part of our focus is looking across merchant acquiring, banking and payments, and a capital markets division, and realizing that there's institutions looking for those different divisions to really work together. And so there's a compelling point around just our investments of kind of cross-selling across the board, which has been resonating in the market as well.
Okay. So Sanjiv, I saved you last for a reason. You've got a very interesting, more global view of what's going on in the industry. So we've now heard 3 separate perspectives from 3 different organizations. There's some themes across them. Sure. So, but what are you seeing more broadly? And I guess if you could comment too on, are you seeing regional differences? One set of things happening in the U.S. versus something different in Europe versus Asia.
Maria, actually, I was going to start with that because I think the first thing I'd like to emphasize on that the transformation to digital very often depends on the regulatory runway of a country. As you go across the world, you will find the rules are quite different. The regulators are different. So, for example, In India, banking licenses are hard to get. Challenger banks can't be there. Whereas if you're in the UK, you can have £3 million and get a banking license. It may take a year or so. So one has to keep the regulatory runway in mind before you start to think of the opportunities and the transformation that's happening on the digital side, right? The second point I wanted to make is there are thousands of banks on the planet, right? And very often we think of digital only from what I'd say the tier one banks, like the big banks, right? But there may be 10,000 banks on the planet, maybe 8,000, 6,000 of them are tier two, whether it's a community bank or a super community bank. And in many of these, in many countries around the world, the digital transformation of these banks was not at the same rate that the tier one banks had, right? So, I mean, if you went around globally, you'd find that most tier one banks and some tier two banks would have done a pretty good job of digital transformation on the retail side, right? 80, 90, 20, 100%, right? But in many countries, the tier two banks were maybe only halfway there. Okay, so I think the journey varies by geography, it varies by maturity of the geography, it varies by the regulatory framework. And then the other point that I would add to this is now, independent of whether it's tier one or tier two, what you find is they've done a much better job on the retail side. They generally lag on the corporate banking side, right? So what we see with our clients, and whether it's tier one or tier two, is a tremendous focus around transaction banking systems, which is really
and it's fair to say that payments was one of the first areas that went digital. And we'll get back to that with Andrew, but I think payments has always been a leader.
And I mean, it's still a hot topic. In fact, most payments fintech companies around the world still get valued very well, right? So I mean, it's still a very hot area. So I think it's just size of the bank, tier one, tier two, geography and regulatory framework is important. Now, if you put that aside, I'd say the two themes that are running, and I think Sanjay alluded to them. I think I've got his slides or he's got my slides. But I think one is around customer engagement. And there's a focus around customer engagement, whether it's corporate or retail. And that may be around digital onboarding or smart servicing using virtual RMs. And that's, one area of focus. And then the second obvious area is around cost reduction, right? Because I think the previous panel was around AI and machine learning. And then there's obviously RPA. And all of these tools, generate anywhere between 40 to 60% of cost takeout. And we also know that in the last year or so, a lot of tier one banks have taken out a lot of branches, right? So in any case, I think the load has come on their back offices and they need to find a way to, process far more efficiently. So I think that's in essence, what I would say, Maria, is what I'm seeing. Yeah.
Okay, great. Yeah. So Andrew, I'm going to switch back to you. So your background's really interesting in terms of the range of companies you've worked at. Not a typical profile for a banker. So, and I think it's also interesting that you're in payments, right? Which has been a leader in terms of where a lot of the at least in financial services, a lot of the innovation started. So I'm going to get a little personal here. So you made a pretty big move to go from traditional tech to a large regulated financial institution. So talk to us about that decision and how are you seeing the differences?
Yeah, well, thanks for the question. It's one that actually I get asked quite a lot, mostly in shock. People find it very hard to believe I left sort of this fintech, utopia, I suppose, and joined one of the big bad banks. And they're not
big and bad. They're big.
I don't think they're big and bad either, really. But from the other side, I think people have that perception. So as I mentioned, I spent about 10 years with non-bank financial institutions. And over the span of that decade, it was always a question of how do you pick the right financial institution to partner with? How are you evaluating their product platform? What makes sense? What are they actually bringing to the table to you as that non-bank financial institution? And as a result, I saw quite a lot of what existed in terms of treasury services or wholesale payments connectivity on the financial institution side. Some of it was good, and some of it, wasn't that great in terms of thinking about the actual tech, how the integration would work, and global coverage. To kind of take it back to your initial points at the beginning of the call, there is a desire essentially for this concept of borderless, and it does come up against a lot of friction as it results, or as it relates to regulations, as well as just different payment methodology and different file formats and how data works in one country versus how data works in another. So, on the fintech side, I'd spent, all those years trying to find that right financial institution that makes it easy, abstracts everything, and provides sort of this overlay service where it's a simple integration, and all of a sudden I'm live in 10 different countries in 13 currencies and have robust data for every single payment message that I originate. We're not quite there yet, but one of the things that was then exciting to me about jumping from that fintech landscape to then an actual financial institution is taking some of that learning about what is it that fintechs are actually looking for, what is it that they want to consume from a bank, and now inside of a bank, how do we build those products? How do we better position them, and how do we commercialize them for fintech clients? And I think that there are obviously some former bankers on the call, and I've found, at any rate in my past experience, that quite often there's a little bit of a disconnect in terms of how a fintech is thinking, how they're looking at the market, what it is that they want to do, versus maybe what a product owner in a bank is thinking about when they're thinking about the newest payment rail, like an RTP or FedNow, for example. So I thought it would be really, really interesting because we're all, this is all about payments. And basically you have non-bank financial institutions on one side of the coin, maybe financial institutions on the other. So I thought it'd be very interesting to jump over to that other side and take 10 years of what I've seen and what I've experienced in-house and say, okay, what can we do with this? How can we better our products and therefore better our experiences for our own clients and our own customers?
I'm warning the panel, I'm about to go off script here, but that's what makes these panels fun. And so where I'm going is this whole concept of no borders, no barriers, right? Which is a big push to do open banking, let all the data free. And I'll let any of you take this question on, but the question I always have is, why just the banks? Why is it just that we're making the banks make their data available and not the big tech companies? So why is it not that all my buying habits, I should be able to turn those over from Amazon or from any other large organization? So it's struck me as a little bit of an imbalanced thing that's all about having the banks release their data. Or it's not that, it's my data that's held by the banks, but my data held at the big tech companies, and they certainly have a lot of it. There's never been a push for me to be able to release that's at the same level. So I don't know if anybody wants to pick that one up and comment on that.
I'm happy to kick it off. So just off the cuff, I'd say it's an interesting intersection between regulators and regulatory authority over institutions. So if you think about open banking and how it's been rolled out in other markets or how other markets are looking at it, it does relate then directly from a regulator to those regulated entities, and it's typically in that banking space. And in some markets, the regulators of a bank are not going to be the same regulators that your Amazon would see or your Walmart would see. So that sort of compulsion to do this and to share data might not actually exist at that sort of federal or that regulated hierarchy. So instead, I think what you do see is that you do see the market trying to adapt for that. And this goes back maybe a little bit to that disconnect I was saying versus how a market actually works and how consumers behave in it versus what maybe a policymaker might perceive or might think. And there are heaps of examples about that disconnect, all over, I think, in terms of US policy. But one of the things that I think you begin to see is that in some concepts of open banking or in some concepts of validation services for bank accounts, for data and so forth, it is now being extended beyond financial institutions to try to encompass some of the fintech providers. So as more and more fintechs are moving into concepts like prepaid balances and offering some of those sort of pseudo accounts to consumers, I think then that there is a desire to pull those into this idea of open banking because people are actually transacting on it. They're maybe considered payment accounts rather than bank accounts, but they're fulfilling the function that a bank account used to, and therefore they should be considered when thinking about holistically, what is my financial health scorecard? What are my financial activities? It would be, I think, a big error to not try to include some of those large players in that snapshot.
Mm-hmm.
I can provide some insight. So I think, Marie, you did say there's definitely an imbalance where you have open banking. Of course, it's not there in the US, but in the European markets, there's a regulation from PSD2 where banks have to, open up their APIs in standard formats, and with consent, customers can share data or open the data, primarily used for portability of accounts from one bank to the other, as well as the idea of, for fintechs to provide value-added services and innovate, right? So that you're not handcuffed with the, I would say, the pace at which a bank drives innovation. That's what drove open banking in the European markets and somewhere in other markets. In the US, it's been more around banks. There's no mandate. Banks are opening up purely for innovating to connect to the ecosystem. If you think about it, so that it can become borderless, so that you can embed that payment into a channel where the customer is not there. That's the whole idea where larger banks are doing out here, right? So you've got to open it up, and then you have APIs, and you can embed it in channels where the customer is. That's called, I would say, it's called ubiquitous banking. That being said, the big techs, definitely have, and I wouldn't call Oracle in the big tech category because, big tech is the GAFA, the Googles, the Amazons, the Facebook, and the Apples, right? We don't have a desire to do any banking. We are not into payments. We are a technology enabler, right? So now,
and you're also not, and you're typically not holding. You're not collecting.
We're a custodian.
Data.
We're a custodian of the data. We don't own that data.
Right.
So we have massive troves of data, but we are the custodian. We're the enabler. That's not the case with the GAFAs of the world, where they, or the BATs. If you go down the Asia, where they have the data and they have a huge advantage where they can play two sides of the game. One side, they are the big tech with technology and cloud. On the other side, they've got data, and they can, if you look at, WeChat as a classic example, you can aggregate services around, everyday life services. You can do payments, you can do lending. What can you not do? So now the big techs can penetrate into what banking is doing without being regulated. The exception is Ant now. They're stuck with a banking license. Hopefully most big techs who would go down that path will end up there. But there is an advantage. One of the ING CEO on Money 2020, this was his big peeve every time, which was basically about, hey, why are we playing this open banking game when the guys on the big techs have the data and they have this open playing field to do lending, to do payments, to do all that heavy, I would say big margin services. They can in a heartbeat turn it on, right? If I have an iPhone, I can basically throw payments in there. On Google, you can sell, you can have an e-commerce store. You can swipe a piece of payment in there. You can bury a payment wallet in there. So yeah, I would say there's an imbalance there. I don't know what the answer is. I do recognize that.
So we're not going to solve that on this panel.
Of course not. Definitely appreciate it.
At least wanted to raise
try.
it. So we can try, right? I'm going to shift gears.
I think the way to try it is basically banks have to take on the challenge and then leapfrog before they get flattened by the big tech. So I would say that's the challenge.
Right. All right. Well, let's shift gears here. So let's talk about this issue of maybe it's a bit of competition with tech. And Elaine, I'm going to direct this to you. And thinking about how does, because FIS has been around a long time. There's a long history, provide a lot of services to a lot of institutions. So how do you guys think about innovation? And I guess think about just talk to the balance of building internally versus partnering versus acquisition, and how you how you have acted, right, in terms of each of those buckets, and how you think strategically about those.
Yeah, sure. So I think like most companies, a big start of looking at, do we build in-house, do we acquire, do we partner? We start with an assessment for that new product and service. Does it make sense for this to be a key differentiator that we offer our clients? Do we have a time to market constraint where we're looking to get something out to market and meet a need, in a way that's agile and can be done in an iterative place? And I think also, is this going to be a core competency? Is this a market that we want to be in long term? And our ability to kind of answer those questions, I think, drives us to consider this, key differentiator, absolutely something we want to build in-house. Adjacent market that we may or may not want to get into, using a partner to get there faster and to be able to be iterative on what exactly we want to do is sometimes a faster way. So that would be sort of the answer around in-house or acquire. I think to your comment in the beginning around, how we stay innovative, I would say a big reliance is still very much on kind of strategic or emerging partnerships. So I think, getting your ear to the ground with smaller firms that are really thinking through some of the latest innovations. We've got a strategy called FIS Ventures. We're bringing about 150 million to early and growth stage startups that are focused on emerging technologies. So whether it's artificial intelligence, machine learning, robotics, digital enablement, distributed ledger, we're looking at those small companies to say, hey, bring us your compelling use cases and help us bring to market with our network and help us learn side by side in terms of, where that technology can be enabled within our ecosystem. So that's, we've got this formal program called FIS Ventures. We also have an accelerator program. And then we hold something called Innovate 48, where we bring about 2,000 participants to come pitch new ideas to leadership. And many of those turn into new products and services that we bring into our product more formally as well.
So, and I guess just for the benefit of entrepreneurs that might be in the audience, how does an entrepreneur access the last two, the ventures, the accelerator, I guess the three, and then any of those events?
Yeah, I mean, happy to help people navigate and over to FIS. I know we are a large company, but the FIS Accelerator is the name of, if you have an emerging startup already, you can apply to receive funding and work side by side with FIS resources. FIS Ventures would be a more formal investment into the company, and then Innovate 48 is think of your usual hackathon where you can bring an idea in yourself, and albeit virtual, this past year is still a really enthusiastic way where we understand new concepts that are related to financial services.
Okay, great, thanks. Sanjiv, I'm going to turn to you now, because your firm has been very active about sharing insights around the current environment, which COVID has affected many things. But you have called, at least for banks, COVID-19 a black swan event, and that it could be an opportunity to accelerate both digitization, and we heard that in the introductions about what the key themes are. But can you just share a few points about some of the insights you've put out and what you're seeing, organizations doing?
So, Maria, we had a chance last year to, in fact, with a different kind of program where it was a board mandate to actually review the performance of the bank CEO and define his KPIs or KRAs for the year. And it's a very successful bank that I can't name. And obviously, one of the parameters that I was designing was around digital transformation of the bank, right? And when we started to define those KPIs for the bank or for the CEO, from my perspective, the measurement on his performance had to be end to end, right? I mean, it couldn't be only about the back office. I mean, we all know for an extended period of time in the last few years, in any case, most back offices are 90 to 100% digital STP, straight through process transactions. And therefore, the way I looked at it was, digital products, digital customer acquisition, digital onboarding, digital credit, and digital back office, right? And then therefore, what percent of your customers actually have completed the full sequence, right? So the reason I'm bringing this up is that there's been a fair amount of digitization for the last few years, right? So just talking about digitization in the general context isn't enough. The question is, is there a truly digital component of the bank's customer segment end to end, right? And therefore, if you take that under consideration, then I would say, the black swan opportunities in really three buckets. One is around driving digital adoption with the customers and customer engagement around that. It's around the fulfillment, and we talked a little bit about fulfillment. We talked about credit and the automation of credit, and really going back to the ecosystem, right? The marketplace. Somebody had asked me 3 or 4 years ago, what will a bank look like in the future? And I actually think it's going to be a marketplace, right? Where and that's where the earlier conversation you were having about the FANGs or the big tech companies, right? They're already kind of there, and they're having the benefit of being there without having the regulatory constraints. And our clients are heading in that direction at a slower pace because they have these speed bumps or regulatory controls that they have to deal with along the way. But ultimately, it's going to be a marketplace. And the way that marketplace will operate is obviously adapting fintechs that provide great solutions. Do banks have a good fintech roadmap? I think that's very important. We've seen 3 or 4 years ago that everybody gets super excited and is trying fintech solutions because, if there's an API or open banking opportunity available, they'll just keep on bringing fintechs. They'll run labs, and these labs don't really work that well. They've turned into venture capitalists. At one point, I've had banking clients who are busy buying out, fintech, right? Who, in large numbers, and, who made you a VC, right? You're supposed to be a bank, right? I can understand on a strategic basis doing some of these acquisitions, right? So I think, it's going to end up at the marketplace. And the question is, can the banks and all the big tech and I call bank tech and fintech, and I use these words often. If you really look at and I'm sure Sanjay knows this, and the rest on the panel, is if you look at the bank's technology budget for the year, it still is very heavily skewed towards the traditional bank tech side. Okay, and that's predominantly because a lot of companies like Oracle, like Finastra, like Temenos have actually been acquiring companies like FIS, have been acquiring fintech companies and rapidly digitizing their solutions, right? So the budgets are still very much under the control of the CTO and not the CDO yet. Okay, and again, depends on, the maturity of the bank and the structure and so on and so forth, right? So these are, I think, a few comments that I really wanted to make on this, right?
Okay, great. All right, so we've got 7 minutes left. So we're going to move into a little bit more of a rapid fire section for everybody. So I've got 3 questions for you all. So I'm going to start with Elaine, and then we'll move through each of you. What do you think is the most overhyped trend in fintech? The one that if you hear it one more time, you're going to shut down your computer.
Come back to me.
Okay, Andrew?
I will be honest here, and the market's point otherwise, but I just can't with Bitcoin and cryptocurrencies. I'm very, very tired of it. And yes, maybe there's an outlet somewhere, and we can talk about central bank digital currencies. Those I like a lot more, but that's my personal, I guess, maybe pet peeve.
Okay. All right, Sanjiv.
Yeah, you know what? It's the same answer, and I'm laughing because
thank you.
My son yesterday said, Dad, can you lend me $5,000 because I want to be trading cryptocurrencies because all my friends are doing it. And so, that's one data point. But the other reason I'm laughing is, there's a rock star professor at Stern, Ashwath Damodaran. And we had Ashwath come by, he was in India last year, and we had an alumni event. And I asked all the alumni, what did you want Ashwath to talk about? And they said, we wanted to talk about blockchain and cryptocurrencies. And then I reached out to Ashwath, and anybody who knows Ashwath's, guru on valuation and so on and so forth. So I was surprised that he said, no, I'll do it for sure. And he said, why? I said, why? He said, well, 70% of the speeches I give nowadays is in any case blockchain and cryptocurrency. So, I have to speak about what the market wants, right? So yes, I think, I agree with Andrew 100%.
So you vote for that as well. Okay, yeah. Sanjay.
Yeah, I had I have the same answer. Mine was enterprise blockchain because now the derivative of that is Bitcoin. So it's ironical. When we started there, we said, hey, we had all this Bitcoin and Ethereum stuff. And we said, the real thing is enterprise blockchain. Screw the Bitcoins. And then, enterprise blockchain went through its own innovation. It's great technology, but it's really, there's a time for it to come together. I would say the exception is what Andrew's firm is doing. They have something killer, so which we're involved in. I won't talk about it, but there's far and few in between that basically at scale that's been done.
All right. So you're in the same category, Elaine.
Yeah, so it's funny because I was conflicted about the two things that everyone's talked about, but I would go with enterprise blockchain, but I'm a little bit more warmer on the Bitcoin. So I'll split the two.
Okay. And then, of course, there's Coinbase, which is about to go public at a very high valuation and is actually making money. So despite it being overhyped, we've got that going out there. All right, question number 2. What is the FinTech trend? And we're going to go much more rapid fire this time, so you've only got 4 minutes. What is the FinTech trend that everyone will be talking about in 12 months and in 5 years? Andrew?
I'm going to go back to it. I think that it's probably central bank digital currencies and the evolution of that we've seen and sort of Ottawa and other markets.
Is that 12 months or 5 years? You got to give me 2. You got to give me 2.
Somewhere in between 12 and 5 years?
Sorry, no. 12 months, you got to choose. 12 months, 5 years.
All right. Okay, so 12 months, I think it's still going to be contactless. Like people are like the US finally saw the value in it. People are still going to be talking about that in 12 months. In 5 years, it'll be central bank digital currencies.
Okay. Sanjiv?
I think 12 months is API open banking, and I think 5 years is big tech.
5 years will be?
Big tech.
Big tech, okay?
Yeah.
Sanjay?
12 months is the banking as a service, embedded banking, open banking, that theme, marketplaces at the scale. I will say 5 years from now, I'm just going to throw a wild one. It's we are banking. It's like banking anywhere, where I should put my headset on and I should meet my relationship manager right here with a full-blown view, not Zoom. Zoom's going to be disrupted, but I should be in his office and you should see my library.
Your banker is your banker.
It's a complete hologram experience of the banking. The branch goes away, and it's a we are branch. It's so like
they sit in your living room. Wonderful.
Absolutely, yeah.
Elaine. Okay, Elaine.
12 months. I would say it's digitization and that continuation. 5 years, it's data. I think we're going to be solving data for a while.
Okay, and then we're sitting here on January 1st, 2022, and you're looking back on 2021. Sorry.
Sorry.
We're sitting in January 2022, looking back at 2021. And what is going to be the most important thing this year that happens in FinTech/financial services? Andrew.
So I thought about this a little bit, and I don't know if it's the most important. It's the most important to me, and that's going to be it's 3 words, I think, right? And socially minded banking is what came to my mind. And what I'm trying to capture there is just more sort of inclusivity. So we're looking at how do we bank underbanked populations or underbanked segments, especially now in COVID, when we think about digitalization. How do we get people payment accounts, maybe not full-on bank accounts, but how is it that we're actually including more in financial services so that we're covering some of these gaps and some of the potholes that COVID has actually done to our society financially?
So I agree with you, and we invested in Mochify, and happy to make an introduction if you'd like to talk to them. All right, Sanjiv.
Love to.
Sanjiv.
I think
three words. Trend for 2021.
I think it's going to be transaction banking, both for corporate banks, corporate clients, as well as SMEs, the small business. I think basically they'll get to the close to 100% point of the digital strategy, a digital transformation.
Sanjay. 3 words.
Contextual everyday banking, which is all about data and personalization and providing relevant services, not spamming mail for loans that I don't need, but get me something that's at the right time.
Excellent. And Elaine?
Financial inclusion. I'll go with 2 words.
Yeah, excellent. Absolutely. All right. I'm going to go with the 2 because we do a lot in that area. All right. Panel, thank you very much. Thank you for dialing in from India. Thank you for dialing in from New York and California, and appreciate this. And I'm now going to turn it over to Colin for the next event. Thanks all.
Thanks,
Have a good
Maria.
weekend.
Thanks a lot, Maria. Thank you. Thanks. Good night.